I welcome you to this ceremony as we release the KCB Group 2025 half-year financial results. I wish to thank all our stakeholders, customers, staff, regulators, and other partners for the unwavering support and trust in our business over the years.
Our strategy remains the 2024-2026 strategy, transforming today together. Every human being that we touch, we leave them better. I thank the 11,000 plus staff of KCB for all the hard work and looking forward to a very, very strong H2 2025. Like I say, H1 ended a month and a half ago. So actually this is still news for staff. I have a challenge for H2. Being deeply consumed for the customer. Doing what we said we need to do sooner than that. Building strong partnership. And finally, living beyond the numbers. That's my rallying call for H2. Put the customer, put community, colleagues in there, and all stakeholders. Some significant milestones that I want to touch on. The sale of NBK. We concluded that in 30th May 2025. We've obviously opened new 5 branches in high growth areas, Kenya and Tanzania. On payments, I mentioned Riverbank Solutions, though pending regulatory approvals. I think we are on the tail end of that. We talked about an African payment system. If you want to send money to Nigeria, walk into any KCB branch. As long as there's PAPs on that front, you'll pick up from a KCB branch.
The balance sheet for H1 closed at just under 2 trillion, 1.969 to be precise, which is 7% growth on total assets. On a like-for-like basis, deposits grew by about, I think, just under 6%. Our digital channels played a very pivotal role in deposit mobilization. At net loans, 6% growth, but again, like-for-like, that loans grew by 12%. Subsidiaries continue to perform quite well. If you look at the year-on-year growth, ranging from 4% to about 29%. NPL, so we do have some good news on this one. The ratio has dropped 60 basis points to 18.7. The stock has started going the right direction. There's also a lot of work that our recovery team has been doing, enhancing recovery efforts, rehabilitation or restructuring to just ensure that our customers' cash flows match what we are asking them to pay. FX income declined quite significantly, and that's driven a lot by the Kenya business and our DRC business. We are seeing with the stability of the shilling, most treasurers will tell you they don't have much room to price, so the margins are low, but also the volume has significantly reduced. NFI, that's a non-funded income ratio, as a ratio to total income, has dipped below 30 for the first time in a while, and that's driven by the FX income. I think one slide that a lot of people have been waiting for. So the board met this morning and have proposed a dividend of 4 shillings per share. This is split between 2 shillings interim out of the performance of H1 and 2 shillings special out of the sale of NBK. All that amounts to a payout of just under 13 billion. I think that's the largest interim dividend that KCB has ever paid. The last one is deposits, just the operating environment we are in. The markets are very tight with liquidity, so a growth of 6% on a like-for-like basis. We believe the strategies we put out for deposit mobilization across our subsidiaries should move that red closer to the range of the outlook that we communicated to you.